you've said multiple times you don't sell products.
Right.
And so you try to be as objective as possible. Right. I want you to critique the life insurance space. Obviously, you're speaking at the Life Insurance Summit.
I'm preaching to the choir here.
Preaching to the choir, and I think life insurance plays an awesome role, and I feel like it has a bad rap for a reason. If you had to just play negative Nancy right now, why does life insurance have such a negative rap in so many advisors and internet pundits? Like, they think it's the worst thing in the world. And I'm just curious, like, don't hold anything back. I'm just wondering why that rap happens.
Well, maybe they never got a life insurance check as a beneficiary, because when that check comes in, and I told the story up there, the actual story with the beneficiary, he couldn't believe, called me because he didn't believe that it could be true.
You said he whispered.
Yeah, whispered. Not only that, he says, it's not possible. My parents' estate was $2 or $3 million. How could I end up with more than they ever had, all of it tax-free? How is that even possible? So until you see the real value of doing it the right way, but as far as the bad rap, maybe I don't know what the answer is, but it has to be planning involved.
Yes.
Like what I'm talking about, I fit it into a plan of managing taxes, and that's the key to it, the managing taxes, not just selling insurance, because in a vacuum, that's just a sales pitch.
Right.
So maybe people think about that. Or they focus, one of the things I talk about, they focus on the death benefit. Everybody knows about the death benefit. Most people don't care about it. They say whatever they get, they get. What's in it for me?
Right.
I think if they focus more on what's in it for them, like I do, lifetime benefits. Most people don't understand when they get a life insurance policy, that money is still there. I'm talking about the permanent, not the term. That money is still there, building cash value.
Yes.
It's not like it went anywhere. It's just in a different pocket, and it's in a better pocket. It's growing tax-free. I think if it was better explained as part of an overall plan, it's got to be part of a plan. I remember having somebody, one of my clients years ago when I did more estate planning, I had a husband and wife, and the husband was... I think he's the one that was ill. I don't remember. But anyway, I explained the whole life insurance. And again, I didn't sell it. I just said, you have too much in an IRA. Let's get some of that out. And the wife was down with it. There were 4 kids. She says, I'm doing it. I don't care what he says. And he was the older one. And she got $2 million of life insurance. And by some strange reason, she died first. She was the healthy ones. The 4 kids got $500,000 each, tax-free. Then the father, who's still alive, says, I like to get that now, but he was terminally ill then.
Wow. Yeah.
And nothing could be done. Even the kids said, could I do something? How can we get him? It's too late.
Yeah.
So back to your question, when you asked me earlier, younger people have that big advantage, but they don't always have the funds. So start small and build.
You mentioned about the permanent death benefit, and I couldn't agree more. A lot of times we don't care about the permanent death benefit, but other benefits get unlocked when you have that permanent death benefit. If you have a permanent death benefit, some of the chronic illness riders, some of the long-term care
I have
built
that
around
myself.
that.
Yeah.
So you can potentially play different games and be more aggressive with other assets, knowing that you have a backstop.
Yeah.
And so what we're trying to do is help people understand that the death benefit actually makes the power of life insurance work, because you have that backstop. I don't know if you have any thoughts on that.
Of course. That's the name of the chapter in my book, The Power of Life Insurance. And it's not a life insurance book. It's a tax planning book with IRAs. But my life insurance part, even though I don't sell it, I have to say it all the time because people think I'm a shill for I don't have any horse in this race except I have it for myself and my family. And I believe in financial security, not for everybody, for everything. But if you can do it, you should start early whenever you can and start building it. It should be part of pretty much everybody's portfolio if you have assets, and you could have a big tax later on. But even so, as a death benefit, somebody dies early, you never know.
Right. If someone's watching this, I have advisors, but I also have consumers that watch and listen to this podcast. And if someone's watching this, when should they start considering diversifying their retirement into different tax buckets? Do you have like a dollar amount or an age amount?
No, it's a time amount. While rates are low, which they are now. If you're talking about getting some money out of the IRA, the Roth, the life, while rates are low. If you can get money out of your IRA while rates are low, even if you're 40 or 50, put it in a Roth. Don't do life insurance. I wouldn't do life insurance till you're in your 60s, as I said, because of the 10% penalty. But once you're 59 and a half. Remember, this IRA to me is just another vehicle to be leveraged. I always say use it, leverage it, or lose it to potential future taxes. People sit there with this and they're doing nothing with it. It's kind of like you have another speaker he's on right now on reverse mortgages. Yeah. People are not tapping into their equity in their home.
Yes.
And it's the same thing. Why are you not tapping into this IRA, which is now, because of the Secure Act and the 10-year rule, a horrible vehicle for wealth transfer and estate plan, very costly tax-wise. We could do better with it by using low rates and funneling in. I said they're exchanging bad assets for good assets.
I'm curious your thoughts on reverse mortgages, because reverse mortgages are very similar to life insurance. It can be misunderstood.
But that was a thing years ago, but they changed the industry. It's a great way. Again, talk to your advisor. Anyway, Tom Selleck said it's good. So, you ever see the thing on The Simpsons where they have Tom Selleck?
No,
it's a funny
I'm showing
clip.
my age on the other way.
Yeah. And Homer Simpson's, I think, talking to him, and he mimics the Tom Selleck ad. And he said, "I'd believe him if he leaned on the fence post," and they showed him.
Yeah.
But there's something to that. And same thing with life insurance, but it has to be part of a plan. One of my key messages there were to begin with the end in mind.